Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Wednesday, August 28th, 2024. It is 9:47 a.m. Eastern Time now, so market's been trading for just a little bit. Figured I'd get one out. Didn't really post a lot yesterday. It was a flat day. Markets were flat, so there's really nothing new. There, one little whipsaw, I'll cover that on the 60-minute charts, but other than that, the technicals have not changed. Today, as I've been stating, is the most important day of the week, with the NVIDIA reporting after the close today. NVIDIA being just pretty much of the stock market. It personifies the AI bubble, the hype, everything else. You guys know my thoughts on where it's going. I'm just going to start out here with the long-term picture of the markets, then we'll go down to the shorter-term charts. Recap back here in June, end of June, laid out this market top range. We pretty much hit the top of it, within 1.5% of that market top range. Went down, we hit the second target. I've been calling for a move down to the 200-day moving averages. That's where we hit. As expected, we bounced, and that's it. So I still maintain this is a initial leg down, counter trend bounce, and this should take us down to T3, as I shared lately. Leaning a bit towards, or I should say very much open to the fact we may have little, if any, reaction on T3 if my analysis is correct, and we take out the lows. I think you'll see just the bottom fall out of the market, and probably a relatively quick swoon down to that T4 target there. Remember, these price targets, a lot of these coincide with key Fibonacci retracement levels. And so far, as I said, even though the media called it a crash, that big drop, I referred to it as nothing more than just I'm not going to call it a run-of-the-mill drop. It was certainly impulsive, but not a crash. You'll know a crash when you see it. I think we'll see one this year. Could see one sooner than most think. So, like I said, NVIDIA is either going to make or break that. That has a very good chance. We also have GDP tomorrow. I'll cover the economic calendar in a second here. But NVIDIA is either going to make or break my market top call, because, as I said, if we go up much more, you guys know my trading plan, where it's at. So I'm going to take short positions home into the NVIDIA earnings. If you are risk averse, then that's you'd want to probably hedge up or go flat. Again, that's up to you, how you trade, and how diversified you are and where you think things are going. So NVIDIA, of course, being, to me, just about everything. On that same day, end of June, back here, it gave you the comparable or separate targets for NVIDIA, the first of which was hit, calling that one down to the 200s as well. So we hit the first target right there. We reversed, gained the bounce, or a good part of it, I should say, in both the market and NVIDIA. And today's earnings, as I said, will make it or break it, because if it's a positive reaction that sticks, NVIDIA is going to go to new highs. Yes, as I said, with the market and everything else, it will certainly change the technicals and the fact you have a new high. But as I've repeatedly stated and showed over the years, with a very, very high percentage, that divergent highs that occur, marginal new highs that occur with negative divergence and overbought conditions have a much higher rate of failing. In other words, a breakout to new highs on face value is inherently bullish from a technical perspective, or really psychological perspective, because everybody at that point in time, nobody's underwater. Everyone's positive on their positions. You have no remorseful sellers. And so, typically breakouts to new highs. But what you want to see there, you want to see consolidation. You want to see overbought conditions being worked off, and not see some negative divergence on the indicators. And we clearly have that here. So we'll see, and I will certainly give you my thoughts tomorrow. I don't react to initial pops after earnings. Those initial pops, meaning when the earnings are reported, quite often are not the lasting reaction. They certainly can be, but quite often they aren't. You get the follow-up conference call, give guidance color, and then the market will really decide tomorrow as to, and into early next week, which way they think it's going to go. So as of now, again, depending on how you've traded NVIDIA, where you're, whether you're long or short, that's where you need to determine if you currently have a position, where your stops are. And again, even you might not have any interest in NVIDIA. If you're trading the stock market, NVIDIA matters, in my opinion, more than any other stock right now, due to both its weighting in the index, especially the Nasdaq 100, as well as its psychological importance. And it's just all things AI. I'll get to its partner in crime in a minute, SMCI, which is a beautiful short. It's one of my most profitable positions over the last week. I'll get to that in 1 second. All right, so we have T2, T3, T4, and then potential T5, and those are the measured, drops from where that's calculated from when I first laid these targets out for you on the end of June. All right, let's jog all the way down to the short-term charts. Before I do that, let me just quickly visit the economic calendar and remind you that although NVIDIA, I believe, is the biggest event this week, you do have GDP. GDP, the markets react to it, but it's very much also, to me, it's a pretty dated report. It's reported only quarterly. There's a 1 month lag after the end of the quarter before they even report it. And then it is very subject to hindsight revisions, both the upside. And what happens towards the end of a bull market, GDP is always strong. Then after the market's dropped, and when you're down 30, 20, 30, 40%, and they start to saying, oh, wait, guess what? The bull market's probably over. That's when they come in and start giving you downward revisions to GDP, just like the employment data. You got that huge downward revision recently. So just keep in mind, this is so from the close today till through tomorrow morning, you're going to have quite a bit of stuff out there. And there's personal income and outlays on Friday. So there's the economic calendar. Back to the charts. So NVIDIA, I'm dropping down to the 60-minute chart now. If you recall, a couple days ago, I gave you these uptrend lines right here. I give you levels both on NVIDIA and QQQ. NVIDIA working its way up in this big bearish wedge. Said we'll probably see profit taken before they report. And it held up through it's been holding up. Look, it's still right there, but we had a whipsaw. We had whipsaws yesterday in QQQ and NQ right after I got those out. We never got the 60-minute close. That's not even a whipsaw, actually, guys. It's technically, it kept the trend intact. This uptrend line I'm talking about off the recent lows on the 60-minute chart. Because that was an intra-period break. It's a green candle, meaning it closed right here at the top, right back above the trend line. And look at this. Look how many reactions. So that was a 60-minute close right here. Kept it going. 1, 2, 3. Let me change its color right here to change that to a color that stands out. Okay. So it's been dancing on this trend line, 60-minute closes, a lot of tags bouncing off it, and now we just broke down. So I always say this, and I said it the other day, that when a stock breaks out, whether it's a bullish breakout or a bearish downside breakout, right in front of earnings, the odds of that being a whipsaw go up substantially. It is a breakdown on face value. Like I said, I did suspect, based on the recent run-up, NVIDIA off that lows right here, the day of the bottom right there, it was a 44% rally. So again, it was a rally completely expected. Hard to gauge the exact top. Told you back then, for me, it was a hard out on the shorts, hard in on the longs, meaning a hard reverse, but it's been a soft out of longs and back into short positions. And this one, I will be, as I told you, I'm just going to go into earnings with a put position so I can quantify how much the maximum amount I can lose if this thing just rips up and the puts, end up expiring worthless. However, I will most likely stack on, as I said the other day, some shares. And might even, after this video, I wanted to get the video out to you guys first, might even write it down. I think we'll see. Like I said, this is technically a breakdown, and based on that big run up sense, we could get some nervous profit taking. Could have you could make the case this is a bullish pennant continuation pattern. Although I have to say it's a bit long in the tooth, but who knows? Maybe it plays out that way. And if it does, then you could take the measured target, which is the distance of the flagpole leading up to the bullish pennant right there, added to the bottom, the lowest part before it breaks out. That's how you get your measured target. So if NVIDIA is going to new highs, there's a lot of evidence and until unless proven otherwise, and I've said this repeatedly, the bearish engulfing candles back recently. Remember, NVIDIA peaked first. This is the bearish engulfing that marked the top. There was a bearish engulfing there, but that doesn't matter because bearish engulfings are a potential topping stick. So although that certainly worked to trigger a reversal more downside, this is the one right here. So just like QQQ and SOXX, unless they take out those highs, I'm going to treat those as potential tops. I believe there's a good chance they could be, and therefore that's why I've been on this counter trend move with more downside to come. And again, before we even had this first leg down to hit that first target, it's more of what I started the video with. This is kind of my longer term outlook. That formulates where I think we're going, or I wouldn't give these additional targets right now. That's still the final target T4, and as such, that's how I'm going to trade it. I'm going to game, cover shorts, game bounces where I think they're likely, and then at some point maybe looking to position for a much longer term long position in NVIDIA. But that's a long time away. It's, at least for me right now, at least a long time in percentages. From here to T4 alone, we're talking about a 75% drop. And the thing is, it'll probably come quicker in time. Most of you, I think if you're new to this, and I warned of it, I've highlighted my Hindenburg crash indicator firing and market breadth deterioration and 1,001 other things, including solid sell signals as to why we could see that quick drop. So it caught the media off guard, and they were trying to find a reason why we dropped so fast. They ultimately blamed it, a lot of them, on the yen carry trade busting out. Like I said, I've said this for many years. You've heard me say this. The media, the one guarantee I will always give you, they always slap on. They're going to find an excuse for a rally that they come out. It might be the most asinine reason, but that's what their job is, to come out and tell the public why there was this huge rally in the market today, or why this huge drop, or why everything's dropped. That's just what they do. But it was technically based. Make no mistakes about it. They followed, bearish engulfing candles were followed by trendline break after trendline break and everything else. So we also have potential. You want to watch for a bearish PPO crossover on NVIDIA following earnings. If it does go to the downside, that's one trend indicator you can look at. Let's see, you've got a PPO histogram right here. So when you look at the PPO histogram, this is your PPO right here. When it crosses down, makes a bearish cross, the PPO line crosses the signal line, you go from green to red on the histogram. So you can clearly see right here, shortly after we got the bearish engulfing and then the trend line break that told us to get short, we had that PPO histogram cross, and it stayed red, and it said stay short. And then we covered here for, not because of the histogram, but it confirmed afterwards that we hit that uptrend line target, and we bounced, and it's been green. And so that's one thing you look for. And look, you can see right here, cross green right there. Told you long and strong, right? Here it crossed over red. And there was the biggest downtrend in many, many months. As you can see, we didn't even have really hardly any downtrend. So that's one thing to watch for as well, guys. Okay, somewhere in there I paused the video, and not sure exactly where that was. Shortcoming of the screen recording software. I paused, it moved to the next chart to collect my thoughts, and it doesn't. Sometimes I'll click the little startup button again, and it doesn't register. But either way, what I was saying here is this is a potential bull flag pattern on QQQ as well, similar to the one I showed you a second ago. This is that uptrend line off the recent lows that we just broke. And it's almost, what I did is I duplicated that trend line, made a duplicate, and added it to the lowest point, and that gives you a measured target roughly there. That trend line I had already when I duplicated was a hair longer, so you'd have to just pull it down a bit. And that would take us up there somewhere around 540. Again, if the measured target is met, if that is how things play out tomorrow after NVIDIA, especially if GDP fuels on it there. Now, what I was getting at there is any new high soon will be a divergent high unless it's just a powerful. And that's one thing about this. If this is a bullish flag, bull pennant, bull flag, The nature of a bull flag, when it breaks out, you have an equally impulsive move up. It mirrors, not perfectly, but roughly. In other words, you don't do this. This is not the nature of getting to a measured target on a bull flag. It's more of a mostly unidirectional impulsive run like that. So what I was saying, and again, I don't know where I paused the video, is bull or bear, you should know very soon if it plays out in that fashion. If NVIDIA beats, like I said, and we go up, we're going to start getting to that point of, escape velocity. We're getting near the new highs, and they'll probably go to try to pop it and take out those bearish engulfing candles. That certainly chips away at the bearish case, as would any move that comes up here and takes out these previous highs in the indicators. Because once you do that, you no longer have negative divergence. And then as I was saying, again, I think the video was paused. It's not as if we can't pop the highs and then do that. That's certainly possible. All I'm saying, if you take it out, you've taken out bearish engulfing candles, you've taken out divergence. It just makes it a lot harder to make a strong case that you're going to have that kind of major top put in then. So again, it's not my preferred scenario, but it's certainly in the realm of possibilities and even probabilities. So we'll see how it works out then. Right before I said the video was paused a second ago, I just wanted to say if this didn't get covered, I was covering this Nasdaq 100 futures chart. Again, I laid this out before we even hit the top, calling for an ideal top. I said around 21,000, I'm sorry, on NQ, as what I stated before we got there. We hit a high of 21,983.75, close enough for government work. We're talking mere percent or so, just like in the NQs. And so we went down, and I'm viewing this still as an initial leg. What I was getting at that morning is right there in pre-market. That's right now. I remember where I might have paused the video. I said I usually won't comment after hours on a stock reporting or a Fed meeting because it's all noise. Let the dust settle, after NVIDIA reports, see what their conference call looks like, where the stock goes from there. And then really when the big boys step onto the field tomorrow, the big institutions start trading in earnest at 9:30 when the opening bell starts. So, however, that morning we were down in the pre-market session, and we had a perfect tag of T6. So that's right when I got that hard covering shorts, hard long, all shorts covered into a hard long, expecting the bounce. So where I'm going with that, guys, is nothing's from the bigger picture. That's where I started this video out. Nothing has changed. I view this as the first leg down, a counter trend bounce that took us right back to what was support before. T2 was my first target right here, and we had a little reaction there. But from the scheme of things, we had a reaction there. We gained that bounce too. We gained this one, or at least a good part of it. And so that's bigger picture, and that's where I started this video. And I want to end up there and just say this is most likely where we're going. We've already checked T6, perfect hit of it. And if I thought it was support there when we were back here, the fact that we hit it and had a as predicted, a double-digit and explosive rally, those were the terms I used that morning when we were there, it helps to validate that as even further as an important support level. So if you're looking for, another potential place to bounce, sure, we already had a reaction there. However, the way my price targets typically work is once it has been hit and you had a reaction off that level, that clears the way, just like we had a reaction here. It opens a door. You can have additional reactions. It just increases the odds that the next time you come down to it, you're going to take it out and go on and hit the next one. So with that being said, we've already hit T5, or T6, I'm sorry, right there. Had certainly a reaction off it, a very clear reaction. And depending, again, assuming we don't just blow up here and, I get stopped out and we're looking at trying to figure out where we're going next, assuming we come down after NVIDIA and start rolling down, and it's hard, which I think it'll be. NVIDIA is just a hot potato trade. And you already saw what happened last time around when they decided to rush for the exits and everyone's trying to sell at once. we could just go on right on down through there. And as I mentioned, T7 is the next target, but just like on QQQ, my next target, other than the one that was just hit, I think there's a decent chance we can blow on through there and go on and hit that next target. Again, I'm getting 3 steps ahead of myself. NVIDIA's got to report. I got to do the conference call. We got to see how they trade tomorrow. We got GDP tomorrow morning. If we do this, then guess what? All this is for, not necessarily for nothing, guys. I always say this, and I say it over and over. The charts are dynamic, and so is my analysis. You can go up here, NVIDIA could put in a double top. NVIDIA can blow out, make a marginal new high. If it does, and this is what I was talking about. This is NQ, I'm sorry. This is the Nasdaq 100 futures. They can make a marginal new high. If they do, as I've said, these are your current divergence lines that were at this high right here, this divergent high. And if I extend those over, this is what if it's an explosive, if this flag pattern plays out and we pop up and it's just a marginal new high, you're going to have divergence still. And then if you reverse and the breakout fails, that's what you want to see. You don't want to necessarily short a new high just because it's a divergent high. Divergence is not a sell signal. I've always said that. It is a condition. What would be a sell signal would be a false breakout, meaning a pop of the previous highs right here, followed by a move back down, especially if there's negative divergence. Then you'd see a bearish crossover in the PPO somewhere in here to confirm that divergence. And then that would tell you then that all these targets could still be in play. So yes, there are a myriad of possibilities. And for those of you who don't want to hear that, I don't know, go somewhere else. You're going to have somebody tell you that we're absolutely certainly going to do this. I always tell you if I have a preferred scenario and how strong my convictions are. And nothing has waffled since before we even got to these highs that we'd get up there, go down, and then, it was kind of a fly by the seat of your pants moment. But then that morning came out and said, okay, this is where we're going to have a big bounce. And so far, that's how I'm treating it. It's played out, exactly how I figured. Started scaling back in a little early, but remember that was a soft entry on the shorts. This has been a soft entry scaling moment, whereas that was a hard entry. And so now I have my fill, as I said, and my only concern from now is where to stop out if if post NVIDIA we start going up. And if we reverse, my next concern will be where to cover both swing positions that I've added back and in the active trading account. Active trading account, I try to gain little squiggles, but what I'm open to and would prefer to see to kind of fit, because it's going to take a lot to get us down here. These are I don't even think very aggressive targets. I know by some they think very aggressive targets, but it's going to take that kind of, I think it'll take this kind of impulsive panic selling again. I think it'll take a smack in the face, a knife through the heart of the bulls, especially on NVIDIA, to get that. And if we get it, that'll be the catalyst. Like I said, if anything, I think NVIDIA will be the catalyst. Who knows? We'll take whatever comes. If GDP wants to be the catalyst, great. I think a weak GDP is just going to help the bullish case by saying, oh, maybe Powell will give us 50 basis points now instead of 25. So to me, I want to see NVIDIA as the preferred catalyst to spark the next big wave of selling here, or punch it out and stop us out. And I'll end it here with the VIX. Okay, fewer things will put money in your pocket faster or take it away faster than the VIX. So you got to get your timing right. With NVIDIA on deck, it is a gamble, crapshoot, but I will say we're closer to the low end of the range, so not as much. I think the risks are not bilateral. I think they're skewed to the towards being long right now. In other words, I think there are favors being short. And as far as the VIX goes, like I said before, this was a spike predicted. We got long. It was the first official long trade I gave you in the VIX in a long time. We were long right off the lows. We caught the bulk of that move. Went up, actually ended at one of my two two uppermost targets I gave you. But the thing about the VIX, remember, this is, I made the case both on the daily, and this is a weekly chart we're looking at. This is long-term support right here. This is as low as the VIX ever got. There was a brief period here where it went below, but this is a support range. Yellow's at extreme level, which we just hit, about 1023. And you also had a lot of support here. You can see this was support, support, support. So all but this period here that was support. So we've come down, but here's the takeaway, guys, and I'll make this quick. So we had divergence, and I told you, as big as that pop was, and it did hit my 2009 to 2021 bull market correction level. Those are a level I created that all the way back in 2022. And then I noticed back here I created this, the end of bear markets. This is where bear markets end, right? And so, as I said many times over, we never saw that in October of 2022. We didn't even see it hit this bull market correction end level. This is just where typical, since 2022 right here, I mean, since the 2009 bear, 07 to 09 bear, this is where corrections have ended. And so there's a case can be made that the correction we just had, it hit that level. Absolutely, case can be made. However, I wanted to show you this, that when you get these divergent lows, you typically get that first breakout is a shot across the bow. VIX reels back in, comes back in, but never goes back to that low, then has a higher explosion. Remember, that was a corrective period in an ongoing bull market. Here you had the next divergent low on the weekly. These are all your divergent lows. You can see them here, positive divergence. You had a breakout, came back in all the way down below the breakout point, and you had another pop. Actually, before all said and done, if you look at it, that was the low. That was the low. This was the next up. So you had, and it happened a ways way there. You had another divergent low there, but it was off that low. And again, you had a second pop afterwards right there that was relatively quick. We're still fresh off this pop. It may need a little more time. I will say there was more separation there. But if it's going to happen, I think now's the time based on everything I just told you. Because if NVIDIA doesn't do the trick, the market's probably going to pop to new highs. If NVIDIA rallies after earnings substantially, and it's a rally that sticks. But either way, that's the a potential target up there. I don't think it'll end. It won't end the bear market unless we get down to my deeper bear market targets. Again, those are the targets I started in the beginning of the video. On the daily chart, we had, this is a busy board. But you can see, this was a kind of almost a one-day wonder. I mean, there was a couple days to get it there. Usually you have more than that. And it's just unusual that we saw such a period of surge in volatility and then complete calm and quiet afterwards. So we're still in that area where the VIX may get another thrust up. And then I gave you VXY as if you don't trade futures. I like futures, but if you don't trade the futures, this is VXY. This is where we went long right here, pre-breakout, with an additional buy signal, I said, to come on a breakout. So you got there the next day too. We hit first, second, third, fourth. At that point, said the RR was, not favorable. So I officially closed it out, but look where we hit, that T5 I gave you there. And there's T6. So that if you're wondering where we go, if NVIDIA does crap out, probably back up there. We'll probably take out that previous high there and come on up there to that T3. I might have to tweak it a little bit. I'll be looking at the VIX futures chart and the VIX spot VIX as well. Because remember, this is a ETF that's just rolling the VIX futures, and over time you're going to have decay. That's the one guarantee you have in this. Any VIX ETF, hold it long enough and you're guaranteed to lose money no matter how much you make on the pops. Went up 500 and something percent there, actually more than that from the lows. Yeah, 5 something, whatever. This time around it went up, 132%. But you're going to lose money over time. This is not a buy and hold investment. It's exact opposite. It is a hit and run. You got to have your timing right. So if you're going to roll the dice, and nothing wrong with that, into NVIDIA earnings, if it doesn't go your way and the market starts rallying, we get near or pop the old highs, you might want to let it go. All right, that's all I'm going to say. That's up to you how you trade it. You can see it is at support. When you analyze the charts, you can only go back so far because of the decay that these ETFs have. It's okay if you're looking recent levels, fairly recent, but you don't want to go back years in there. So I will say this support's still valid. And again, what you do is look at the spot VIX as well, and VIX futures. That's what you'd want to look at. And you can see here, this is the spot VIX. And this is a busy board, I know, but I had a yellow line here all along, which was important. It was support here, it was resistance here, then it was resistance here. We popped it, but then that breakout failed, and then we popped it again, and it rocked, and we're back to that support level, about 1573. Remember, the VIX is volatile, so you'll get these sometimes little spikes down through it, but that's it. So we're at support on the VIX. And if it's going to have another thrust up soon, this is probably where we're going to launch from, and the video will probably be the catalyst. All right, I am finished. Again, I'll watch this video after. I usually don't, but I'll watch this one and see where I paused and picked up. If I left anything out, what I'm going to do is after I publish the video, I'll put it down in the comments section, anything that I forgot to mention. Oh, and I will reiterate, as I have been, if you are the mindset I am, that this has been a counter trend rally and this is not a big giant bull flag that's going to do this, semis are still one of my top picks as far as if NVIDIA craps out, especially. If you want to wait, that's fine. There's plenty of meat on that bone. I think I gave you targets recently on the weekly chart. And that's these right here. You can just, after this video is published, go down to the bottom, click on SOXX. It'll load all recent posts on it. And I think I might have given it to you on a static chart. I'm not sure. Either way, just screenshot the video. There it is. T1 right here, 216. T2 is a trend line, T3, T4, T5, and T6. So there's your targets. Gives you a maximum right now based on my final target. Drop of about 35%, and I will most likely be adding more additional targets to this if so. You've got a trend line right here that's a likely target, and this is just all the previous drops here in the VIX and divergent highs. All right, I'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.